Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Friday, September 15th, 2006. The market's just closed, and I've got the Nasdaq 100 Trust, the QQQQ, up here on the screen right now. And we closed at $40.11, as you can see down here in the bottom of this little data box. The 200-day moving average, it's a simple moving average, is at 40.08. Now, I don't put a huge amount of significance in the fact that it closed above there, but it is a psychological boost for the bulls that the Nasdaq 100 was able to close above that level. It also was able to close above the June 2nd high at $40 a share. So when we look at the weekly time frame, you can see it was a very solid up week for the Nasdaq 100, and we've got that. It was testing this trend line, which had been broken earlier, and then kind of acted as support the last few weeks as on a rising basis, but we really moved away from that on a longer term time frame here quite significantly. And that puts the market right up to the lows where the market has had some pretty good support for the first 6 months of this year, or first 5 months in the last month of last year. So we remain at a critical level for the market, and that this level is further significant because of the late 2004 highs in that area as well. So we had resistance here, support, and now let's see what happens. It's going to be, I think, some slow going the next couple weeks. Hopefully, the market can hold on to the gains up in this area, continue to add higher highs and higher lows. More higher lows first. We've had our higher highs here. This week was a very solid week as it bounced off that rising 20-day moving average, like we were looking for. And there was a lot of skepticism in the week in the market earlier in the week, myself included. I thought that Google was on the verge of a breakdown, and I think a lot of people did, and there was a large short contingent in there, and that saw the stock rally almost 30 points here. So, Google, in my opinion, is a tough stock to trade, um, and it just got saved there right at the end. Now it's at the apex. Or close to the apex of this symmetrical triangle. So Google, I'm not necessarily interested in terms of a trading vehicle. I think there's a lot better stocks out there to trade. Although this week, obviously, if you were long, it was a fantastic stock. It just doesn't match my personality. So, looking at the overall market some more, the spiders, SPY, continued to show strength in here, held on to most of their gains. Although we did see a little bit of reason for concern, and that is we had a lower high, two lower highs, and a lower low after these moving averages have crisscrossed. So we've got a rising 5-day moving average, but here on the 10-minute time frame, it's telling us it's time to be a little cautious in here, and perhaps we need to do some further consolidation of the recent gains. The semiconductor holders, SMH, weren't able to touch that 200-day moving average, but they still act bullish. We did have on the daily time frame, they act bullish. Today, what we saw was this gap higher, an initial little squeeze of the shorts, I think, and then a failure in here, and I think that's going to set up for possibly a little bit more sideways to downward action early next week. It was unable to close above this level as well, the June level. So we continue to see mixed messages from the markets. The IWM, the Russell 2000, we had previously been focusing on this trend line, which had been acting as resistance and then as support right in here. We had a nice rally off that level this week. Now, when we look at the daily time frame, we were able to take out this high but not close above it, and I think our next target remains probably right up around just under $74 a share. I think I'll have more market commentary this weekend. I didn't have any new ideas, as you know, last week, so let's just review the open positions that we had. First, we had which is Armor Holdings. We got short a couple days ago right over in here. I had suggested a stop. Let's see. Let's go back to a 5-minute time frame. We got in short right in here, and I had suggested a stop that was hit today. So we got stopped out of that with about a 55-cent gain on AH. Next up, we had XING, which I had mentioned 2 days ago as a potential long candidate, and I had suggested raising your stop to a level of 1180. I would say your stop should go just under this. In fact, I would say if you can get out on any strength on Friday or Monday, rather, do it. We've had this short-term moving average cross the intermediate term. That's telling us that there's a little bit of consolidation due here. And we had also been looking at CYTR to buy it above $1.48. Today's high was $1.48, so it didn't make it above that level. So there was no reason to enter this trade. Maybe next week we'll have an opportunity to get a position in there, but for now, no trade. And then finally, we were stopped out of TiVo today. TiVo we had gotten in right about the $8 level, and I suggested lowering the stop to 786. We had it at 789 yesterday. I suggested loosening that stop up a little bit, and wouldn't you know it, we tagged the low of the day with that stop at 786. So thanks to everybody who did come to participate in that class. Got some nice feedback in there. I'll be doing that again probably in the next month or so if you missed out and you're interested in finding out more about that. Anyways, everybody enjoy your weekend, and I will have another video tomorrow. I'm also going to post an article about when to sell. This is something, another old article that I'd written for SFO magazine, that Stocks Futures and Options magazine, about 2 years ago. Still very relevant, so I'm going to post that up there. And so take a look at that, and I'll have more ideas for you this weekend. Thanks for your time.